Travillian Next is a division of Travillian, a financial services specialist search and talent advisory firm. Since inception, the Travillian team has dedicated itself to enhancing the return on investment of a company's most important resource, its people.
Hello. Welcome to another great episode of Travillian Next. Very excited about our next guest. It is election season. And we were just discussing kind of everything that has changed since we had this kind of set up about a month ago, this podcast. Really crazy. But I'd like to welcome Ian Moloney from the American FinTech Council. He's the SVP of Policy and Regulatory Affairs. Ian, thanks for joining us. Really appreciate it.
Yeah, thanks, Keith. Thanks for having me.
Yeah, we always have great discussions when we are on the phone or meeting in person. We have a great relationship with the American FinTech Council. We have a great relationship with Phil Goldfeder, and Phil always told me, look, he leans on you for the updates on policy and what's coming out of the different regulatory bodies. So he thinks very highly of you. So do we. So I'm very excited to have you on because this is a very, very interesting time for banks and fintechs. There's a lot happening. There's a lot changing. It can be overwhelming. So to have, the American FinTech Council and someone like you kind of describing it and putting it in terms that we can understand, it's fantastic. Really wanted to talk about first kind of, the 2024 landscape, kind of where we are right now as we head into prime election season, and then kind of the engagement with the American FinTech Council and how you're navigating these waters here.
Yeah, definitely. It's it's great to be on the show. I think really both Phil, myself, and the rest of the team at AFC, we really like our partnership with you all.
Yes.
And it's it really is that team effort, I think, has come into the fore within 2024, looking at the regulatory landscape, but also the policy making, the legislative landscape at both the federal and state level. And American FinTech Council, we're a standards-based trade association. We represent a number of the largest fintech companies, but also the innovative banks that are partnering with them. We represent regtech companies, just the gamut of different entities, different companies that are really pushing for this new financial services industry and really looking forward to it. And that's come at quite an interesting time when it relates to 2024, because ultimately, I make the joke that if there's ever a dull moment in fintech policy, like I should blog about it, or maybe actually, given the forum, like we should do a podcast on it. So it's been a very lively 2024 thus far. Recognizing we're in August and that, as you mentioned, we're getting into election season. But just to set the stage, I think on the federal side, it's interesting coming from 2023. At the end of 2023, we had a number of very important rulemakings coming out of the Consumer Financial Protection Bureau as it related to personal financial data rights, also digital wallets and their larger participants rulemaking. But then we also had in 2024 some movements on that. Obviously, the comment periods ended right at the end of 2023 and shortly after in 2024 for the larger participants rule. But those issues are really pervasive in the conversations in 2024 around, how are banks and fintech providers, those third parties, going to be allowed to access data, going to be able to use that data, whether it's because in the proposed rulemaking, there's a lot that's focused on limitations around secondary use and cross-selling of products that are leveraging consumer provided data. And so those limitations, I think, from our perspective, can actually create some harm as it relates to the ability for consumers to access, more responsible financial products and services, be able to engage more effectively, because the CFPB is establishing a scenario where, like, if an individual goes after a personal loan, provides their data to a fintech company. That fintech company has panoply of data from that consumer, and they notice maybe that this consumer has another loan, like a car loan or something, that they could easily refi and get them into a better product. Then, based on the limitations in the proposed rulemaking, it could limit that. And so, ultimately, that's been part of the conversation. The standard setting has been part of the conversation. So, and that's just on the personal financial data rights. There's also been a ton of movement at the federal level on customer information program, which is under the Bank Secrecy Act. So there's been a lot of engagement there on making sure that banks and fintech providers have parity with the existing credit card exemptions. So sorry to jump into the weeds so much on the
no. This is where you live, and this is why banks and fintechs become members of the AFC. I love when the AFC sends out kind of that weekly summary, or if there's a new policy decision. It's so important because you're right there. You and Phil and the team are in Washington and right there, advocating for your members and the whole industry. Heading into the election, looks like it could go either way. Every election seems that way. But what do you think the impact of the election will be? Not to get political or anything, we have a candidate probably would continue the same course of the last 4 years for fintechs and bank regulation. And then, the other candidate, we already kind of know what he would do because we saw, 2016 through 2020. What do you think the impact would be, let's say you can go either way, with the same continuation, and then we could talk about if there is a change in administration and how that may affect the members of the AFC and also banks and fintechs across the country?
Yeah, I think this election, similar to 2020 and 2016, obviously these elections have been very important for a number of reasons. And then thinking not only at the presidential level, but you also have congressional races going on, and then state gubernatorial races and state legislature races, which are also part of the ecosystem because a lot of the fintechs that are engaged, have direct licensing regimes or registration regimes, some sort of oversight at the state level. So those have major implications, and we were also kind of in the 2024 timeframe. We've been heavily engaged in the states as well. So there's kind of a lot of ground we could definitely cover. But as it relates to the presidential election, I think you're generally right in the idea that of the two candidates, we have on the Democratic side likely to be Kamala Harris. She has signaled, at least as far as we're reading it, very similar cabinets, very similar perspectives of the Biden administration. There may be some changes in the folks that are leading, but there's by and large been that sense kind of across the industry that this is going to be more of the same sort of regulatory regime, a shift a little bit in focus. And I think it's important to remember that Vice President Harris has a background in the Bay Area. And so that does make her a little bit different from the Biden administration. And then when you think about, the selection of Vice President, the candidate, Walz, I think that signals that there's a good opportunity for, more of a centrist view. And I think there could be, not to put rose tinted glasses on, but there could be some less of a fast and furious regulatory agenda, which we've seen within the Biden administration, and more of a concerted effort for long-term, sustainable regulation. And that's actually, I think, for our perspective, something that we're encouraged by and we would like to see, because ultimately we want to see regulation that allows the market to establish very settled expectations so that way they can operate effectively throughout administrations, and we don't see this massive politicization of financial services regulation, because ultimately that creates more problems than it solves, and then people end up and companies end up focusing on which election and how it's going to swing, and that's not a good way to run a company, especially a financial services company. On the Republican side, I think you're right that there's going to be a lot of changes. It's going to be potentially deregulatory in nature. I think some of the more pointed or less time-tested regulations will be up in the air, particularly around, like, for example, in the earned wage access space, which we have a number of earned wage access members. There was a proposed interpretive rule that was released from the CFPB. Now, interpretive rules, they're non-binding. They're not legislative rules. They're merely the agency's interpretation of how an existing regulation applies to a given product or service. And so that actually creates a limitation on its ability to stay post different administrations. And so it could easily be subjected to, if there's a proper case made that this actually functions as a legislative rulemaking that's being paraded around as just an interpretive rule, it could be CRA-able. There's also the issue that the new whoever comes into the CFPB could just invalidate it, and so there's a lot of those sort of rulemakings that have under the current administration have a significant amount of force, at least in a de facto sense, but ultimately are not able to stand the test of time. And I think you would see a lot of that kind of occurring under a Republican administration. And then if you have a full, trifecta where the Republicans control the House, the Senate, and the executive branch, then you could potentially see even larger shifts. There's been talk about moving the CFPB from a singular director, to a commission structure. I don't necessarily see that happening unless there's a trifecta, but ultimately that's, those are all on the table, and it would be a very interesting time, both politically as well as from a policy standpoint, and even an administrative standpoint. I mean, I'm an old bureaucrat myself, so I have to be engaged and intrigued about how my former compatriots would engage, and how how the government will function kind of writ large.
Yeah, oh my God, there's so much, and then you can't even get into state by state level, because I always see your CEO Phil in front of different legislative houses across the country. He's racking up those airline miles. So yeah, down to the state level, but at the federal level, yeah, when there's a change in administration, there's always changes. But even when we're going to have either somebody coming back who was in before, or a brand new president. So the incumbent, Joe Biden, has stepped out. So there will be changes either way. So it'll be interesting to see. It should be a fun few months. But where we stand now, some of the major kind of rules and laws that are affecting your members, our banks, our clients, and fintechs. One that's always has been in the news all year. Where are we with the Dodd-Frank 1033 rule or law? I'm not exactly sure. You can educate me on that. But where are we? Where do we stand? Heading into the fall season with the 1033 Dodd-Frank law.
Yeah. So absolutely. So with regards to Section 1033 of Dodd-Frank, that was the CFPB's what they're terming as their personal financial data rights rulemaking. That finished up in the proposed phase, and it's been an 8-year process, which I think is important to note, because I was working on this issue even when I was back at the U.S. Government Accountability Office, working on this focus on data rights and how do people, how are they able to engage, and what rights do they have, if they have any. And it's interesting because the industry has come a very long way as well, from the days of 2016, 2017, where you had data aggregators first coming on the scene, and banks were very suspicious and did not have the trust that they do now to provide the data. To now we're seeing companies engaging with APIs, and there is a piece of that that's tied to the proposed rulemaking as well, to require all banks to have a developer and a consumer API to access the data. But that proposed rulemaking finished out in the comment period finished out in 2023. So the agency then has to go through, under the processes of the Administrative Procedures Act. They have to consider each material comment and weigh out how this is going to actually function. To that end, there was a specific point around standard setting bodies and what needed to be done, how they needed to be established and recognized. And we actually advocated for them to ensure that the standard setting bodies had a particular focus on innovative banks, innovative fintechs, smaller entities, because a lot of these banks that are partnered are community banks, and they represent a different power dynamic exists than with the globally systemically important banks, for sure. But then moving through 2024, they're still in the process of looking at the comments for the full finalization of the rulemaking, but they did carve out a separate finalization of the standard setting bodies, part of the rulemaking. So CFPB finalized that earlier this year, which we were encouraged by. We actually saw a lot of the things we advocated for found their way into that finalized rulemaking. As far as it relates to the rest of the fall, it's highly expected that October will be when the CFPB will finalize the full rulemaking. And to that end, we really want to see, as I noted before, that there's specific changes as it relates to the allowable use of data for cross-selling of products and for secondary use. So that's where I'm hopeful that the CFPB will listen to what has been truly an industry chorus, focused on that secondary use case, and adhere to those abilities and not have such strict limitations. So that was on 1033, and there will be more to come, and we'll see how it goes, especially recognizing that this is a major change for a lot of different financial institutions and for consumers as well.
Yeah, and we'd have to have another podcast, but I really want to dive deep into how this will affect talent, I think, at community banks and also fintechs. If this rule passes, what types of new skill sets or shifts in talent, since Travillian, we partner with banks, we partner with fintechs, what types of roles, and we don't have to get into it today, but I think that'll be a follow-up podcast, part 2, would be, when this passes, or if it looks like it's going to pass, and go through what's the timeline, and also what types of skill sets or new talent will banks and fintechs need to adhere to this 1033 rule. A few other, interesting breaking news or, alerts I got over the last month or so. The third-party arrangements rule, or proposed rule, pre-rule, I think is what you called it. Yep. Pre-roll. Try to keep up with all this. This is why we have you. It's impossible to understand kind of everything that's going on. But what does that mean for banks and fintechs and your members, at a high level?
Yeah, absolutely. So the interagency third-party arrangements request for information, which I know is a mouthful, so I'll try to
have an acronym for that or something. They will
just
have
call
an
it
acronym for everything.
Arrangements RFI. So
okay, that's cool. That's what I wrote down here. Third-party arrangements pre-rule.
So it is part of, and it's interagency, and it was issued by the FDIC, OCC, and the Fed. The banking, the prudential regulators. And so it's very important, actually, because a request for information, just generally speaking, is the agency, or in this case, the agencies coming out and saying, we have specific questions And we want the industry and others, the public really writ large, to opine upon these issues, these ideas, these perspectives. And it was tied to primarily some of the risks that they're seeing as it relates to the fall of Synapse and some of the changes in third-party arrangements that they've seen in the wake of last year's guidance on third-party arrangements, so similarly situated, and just how the industry is engaging, what kind of risks and benefits as it relates to contagion within the financial services industry it can be understood. And so ultimately, AFC's perspective, and we're planning on issuing a comment letter on this because it is very important to our membership and to us. I mean, this is our bread and butter. And so ultimately, the way we're seeing this is actually that this is a positive for the industry, because it's, when you think about how evidence-based policymaking should operate, policymakers, regulators should always be operating from a position of understanding the products and services that they're regulating or that they're engaging with. And so an RFI, to that end, is supportive. And so we're focused on really pointing out where there's some leading practices, what are some opportunities for banks and fintechs? How has this been very helpful to serving traditionally underserved communities, which we've seen in the data, some coming from folks over at the Federal Reserve Bank of Philadelphia and kind of across the academic spectrum as well. And so there's ultimately a lot of support that we have for showing the benefits, recognizing that depending on, not all fintechs are created equal, not all bank fintech arrangements are created equally, but there's definitely some leading practices that can be gleaned as it relates to the onboarding processes, the consideration of termination at the end of a relationship, and how making sure that there's viable alternatives, that there's not a concentration risk associated with any one given fintech within a banking relationship. So these sorts of things actually are very helpful to ensure that some of the enforcement actions that we've seen in 2024 are not continuing to come up, and that there's a good understanding both on the industry side and the regulator side of what the industry is doing for the regulators and what the supervisory expectations are for the industry.
Yeah, so it's positive.
I think so. I think overall it's a net positive. It's a step in the right direction of ensuring that the regulators understand what is happening in the markets. And for AFC, we have a very consistent cadence of engaging not only with our members, but also with the federal regulators, Prudential, as well as other market regulators and state regulators as well, because ultimately it's really beneficial to ensure that everybody around the table, all the stakeholders, understand what's actually happening and how fintech is really truly serving consumers that have been historically excluded from financial services.
Yeah, no, that's great. That's great. So we'll have to keep up to date on that one. And then another alert or news story that came out recently was brokered deposits. I think with Bass Banks. Was it with sponsor banks?
Yeah.
Ian? Can you give us kind of a high level synopsis of what's happening there from your point of view?
This is where the third party arrangements is an RFI. Request for information. This is a notice of proposed rulemaking. So this actually would be a legislative rulemaking, would have the force of law if it were finalized. And with regards to brokered deposits, it's interesting because to give a brief history of it, there was actually a very long process that went on from roughly 2018 through 2020, and there was a finalized rule that had specific changes to what the definition of a broker deposit was, what the exemptions were for determining if deposits received from a third party are actually brokered, or if they're actually core deposits, or how they function, if there's an exemption that's allowed under the primary purpose exemption. And that 2020 rulemaking that was finalized actually allowed for a lot of fintech companies to engage in a more fulsome manner with the banks that they're already partnered with and move some deposits to those banks and make sure that ultimately, I mean, they're insured deposits and they are not necessarily the primary purpose for the relationship. Oftentimes it's lending or payment services, things like that. So they functioned under that exemption. Now moving to the current administration, this is actually, it's seen as being sort of a focus on by the administration to react to some of the bank failures of 2023 with Silicon Valley Bank and Signature Bank, and then also the failure of Synapse, the middleware provider, as it relates to deposits. And ultimately, I think the unfortunate part is that the FDIC has opted to pursue broker deposits, but has not discussed the uninsured deposits that we've seen through reports from the U.S. Government Accountability Office, the FDIC OIG, the Fed OIG, very respectable places that were actually, more to blame. And that broker deposits, it's almost a bit of a misnomer or a red herring. They're kind of looking at shifting this around. And the unfortunate upshot is that if this is finalized, it'll result in a new regime. It's not just a rolling back to pre-2020 days. It's actually going to be a new regime that banks and fintechs will have to engage with. And it could make the products and services offered by fintech companies harder and more expensive to offer. And so then that decreases the amount of availability to those that are historically underserved, which, under the 2020 rulemaking and since, the market has developed around those rules and been able to really serve those communities much more effectively than historically they've been able to in the pre-2020 era. So it's not a good news story, unfortunately, but we at AFC are heavily involved in, and there's a number of other trade associations, because this is broader than just the fintech space. I think a lot of the banking industry has really developed around the finalized rule and the concerted effort that went on in that capacity, and now is having to re-engage with this topic in a time where we're all a little confused of why there's such a quick switch in the perspective.
Yeah, it's I'm not even going to go down that route, but it's we'll see what happens there. It's there's a lot flying at you, Ian. You're must be a busy man. Keep you on your toes down there.
I try to keep busy, and I know the whole team honestly is busy. Phil is busy. My colleagues over on the legislative side are always busy because, like I said, it's never a dull day.
Never a dull day. There's always something going on in Washington or at the state level, which brings me to our final discussion here. And I mean, this is another one I think we could have like an hour chat on, but artificial intelligence, AI. Everybody's talking about it. It's everywhere. Banks, fintechs. Where do we sit on the legislative side right now with oversight or guardrails for AI?
Legislatively, it's very interesting because it's been mostly a state-by-state effort. You've seen some more on the regulatory side coming out of California. You did see that in 2024 that Colorado pursued and passed a very expansive AI law that upon signing, the governor actually noted, because it has a very long implementation date, that before its implementation date in 2026, there needs to be significant reforms, actually.
Yeah.
And so I think that's actually indicative of the fact that for those that are seeking from a legislative standpoint to move forward with that legislation, it's almost in some ways too early. The technology is still developing. There's still many use cases, and AI technology is very different in depending on the use case. And so you have machine learning over in one place, generative AI in another place, and ultimately from our perspective, that the best course of action from both a legislative standpoint and a regulatory standpoint is, of course, you need to have a unified approach that is really focused on what the actual jurisdiction that an AI tool or technology might be used. So a federal approach is ultimately probably the best opportunity, as opposed to a patchwork of state operating in that capacity. And then as it relates to financial services, we have to think about, from a regulatory standpoint and a legislative standpoint, what are the actual use cases that are being engaged on the AI front, and what's their impact on consumers? Having a use case that is focused on machine learning, using machine learning to underwrite a borrower, that's a very different risk profile, and therefore requires very different processes and engagement from the company, the financial institution, than maybe a fraud mitigation tool that augments fraud checks from the compliance side of the house. That impact is very different than similarly, like use of chatbots. That's also a very different use case and can have very different harm associated with that, and there's very different risks. So ultimately, we see it as if they're going to pursue legislation or regulation in this space, that it has to be very activity specific and context specific and derived from that risk-based standpoint.
Yeah. And it's going to move so quickly too. So by the time it goes through, the law process and the voting, and that could take months or years, AI could morph into something else, or some other issues.
It definitely
might come
could.
Up. Yeah.
And I think it's interesting too, because as we stand, now months before the election, it's highly unlikely anything is going to pass that's substantial or anything like that. But moving into 2025 and beyond, the folks on the Hill, as well as in the bureaucrats and the administrative state, all are aware of what's going on with AI, and there's a lot of attention being paid, as you mentioned. So it's beneficial to ensure that good education efforts are going out. And then also for, I think, a lot of your folks on the talent side, it's important to be thinking about how are they engaging, who are they bringing on, and what kind of programs and services for the onboarding process are they ensuring that their individuals on the compliance side, on the risk side, are being trained on as it relates to AI, so that way they can onboard effective products and services and really seek to not replace any compliance function with AI, because that would create huge issues from a regulatory standpoint, but to augment them to be more efficient and find ways oversight for modernization.
Yeah, and we're going to definitely have another podcast part 2 after the election, because I think there's so many things we could talk about in November and December. I think 1033, I think by then will be, either implemented or delayed, I guess. You're saying probably in October we'll have more.
Yeah, it should be finalized in October, and then the compliance window actually is up to 4 years, depending on the size and the type of institution.
Gotcha.
So yeah, there's a lot of fun stuff there.
Yeah, and just broaching on, we can't even dive into the talent aspect, but after we know kind of the results of the election, hopefully. And then also what we kind of talked about right here, from 1033 to AI, broker deposits, how that will affect the needs for talent, compliance talent, risk talent, those type of things. I think we'll have more, I don't know if it'll be completely up to date or we'll have a notion of what is happening at that time, but I think we'll have a better view, especially, who knows? 3 months from now, Ian, I mean, who knows what's going to happen in the next 3 months? So, like I said, a month ago we were talking, and it was a quiet summer, and now we're talking in August, and it's definitely not quiet. So,
no, it's a heavy metal concert at this point.
Yeah, so. It's Metallica and AC/DC kind of playing on stage together. But that's how it's probably going to be for the next 2 to 3 months, and then leading into next year. So, strap up. It's going to be a roller coaster. Make sure you got your seatbelt on, and we'll definitely. I want to thank you for your time, and I think we'll definitely have. And I want to give a shout out to the AFC Summit, right, which is coming up in
November 19th.
November
Yep.
19th,
AFC Summit
right before Thanksgiving, and that'll be post-election. Oh, man.
It will be. It will
Oh,
be.
wow.
And that creates its own sort of interesting dynamic. It'll be, last year was fantastic. This is, I think, our 8th year doing a summit. And it's such a great opportunity to bring in policymakers, regulators, the industry, all into one space in DC, November 19th. We hope that all of your listeners can join.
Yeah, I was there last year. It's one of the best conferences I've been to. It's smaller, intimate. You had breakout sessions. You could go talk about BaaS and partnerships. You had incredible people on stage. So I expect, even this year we'll have a better view of post-election. We'll know hopefully who's executive branch and who controls the Senate and who controls the House. So we might have a better idea of what's coming down the road in 2025. So that's a summit you can't miss, and you guys make it entertaining and a lot of networking. So I would definitely recommend to the viewers here to go to the AFC website and to register for that. Now, Ian, thank you so much. Really appreciate it. You really are. You and the AFC are really, not only helping your members, but also the community kind of just decipher everything that's coming out of Washington and the specific states. So we're, fighting for the little guy. We do that here at Travillian. We like to, fight against, nothing against the big banks, but you also need to have representation in Washington for the fintechs and the smaller banks. So it's great to see what you're doing at the AFC, and look forward to another chat. And man, enjoy the election circus that is coming around. Thanks, buddy.
Thanks so much. Appreciate it.